Hey now, I'm back with another strategy review. In this video, I am going to show you how to trade this award-winning system that was developed by Rob Hoffman, who has won over 30 international trading competitions. And for those who stick around to the end, I'm going to share with you some of my optimization ideas. Just be sure to hit that subscribe button before your trading account lands on your head. This system is a variation of the Hoffman inventory retracement strategy. And like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes two free TradingView indicators. As always, links and settings to all indicators are listed in the description. The first indicator is the Rob Hoffman inventory retracement bars. Inputs and style will be kept at default. This indicator will print a green triangle below a candle that has retraced at least 45% to the upside, and a red triangle above a candle that retraces 45% or more in the bearish direction. This indicator will provide our entry signals. The second free TradingView indicator is the Rob Hoffman overlay set. I am going to uncheck these lines and color these lines in white. This indicator will determine the trend direction and provide entry confirmation signals. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar 15-minute Japanese candlesticks. The rules to enter along on my version of the Hoffman inventory retracement are: first, the slow line in purple must be above the fast line in green with no other lines in between them. Second, we are looking for a red triangle from the inventory retracement bar indicator. Our rules are met when this candle closes. That is our trigger. A buy stop order is placed at the top of the trigger candle. The stop is placed at the slow line in purple. However, if the trigger candle touched the slow line, then the stop must be placed at the fast line in green, and the target is 1 to 1.5. We enter the trade on this candle. And after a while, this example hits the target on this very bullish candlestick. If you enjoy this content, make sure to click that like button. I have one more long example. The slow line is above the fast line with no lines in between. Then we get a Rob Hoffman inventory retracement bar signal. This is our trigger candle. A buy stop is placed at the top of the trigger candle. Since the trigger candle touches the purple line, we are going to set the stop at the fast line in green and target 1.5 times risk. The position is entered on this candle. And after some extended consolidation, this one hits the target. Now we flip to shorts. This is what I will test for shorts. First, the slow line in purple must be below the fast line in green with no other lines in between. Second, we need to see a green triangle from the inventory retracement bar indicator. All of that happens on this candle here. That is our trigger candle. A sell stop order is placed below the trigger candle. The stop is going to be placed at the fast line in green because the trigger candle touches the slow line in purple, and the target is 1 to 1.5. The trade is entered on this bearish candle. And this example rapidly hits the profit target. I'm going to show you one more quick short example. So here we can see the purple line is below the fast line in green, and if you look closely, you can see that the fast line just crosses down under the white trend line. Then we get an inventory retracement bar signal. This is our trigger candle. A sell stop order is placed below the trigger candle and the target is 1.5 times risk. And here we can see that the trade was entered and hits the profit target on the same candle. I'm going to share with you some phenomenal ideas on how we can improve this system along with a trader's landing score. And now it's time to do what I do. If you enjoyed this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do extensive back and forward testing and be sure to let our community know what you discover. This test was done on Bitcoin versus the US dollar 15-minute candles. It took about 6 weeks to get the 100 setups. Just a caveat on that, for this test, I took every signal whether I was already in a trade or not. This system does give off many signals while you are in a trade, which is probably why it won so many competitions. More on that later. This dataset produced a 56% win rate that included 7 consecutive winners paired against 5 losers in a row. The maximum drawdown wound up being 7% with a nice profit factor of 1.91. Risking 2% per trade, this test yielded a gross profit of 80%. The equity curve here is very impulsive to the upside. Looking at the 4-hour chart of the testing period, you can see that it very much mimics the equity curve. This tells me that this system does get you into a trend, which is exactly what a trend following system should do. The question is, how would it perform during this period of market action? Certainly fewer signals. I give the system a Trader's Landing score of 8 because it does get you into trends, is an easy to understand, repeatable system, but Rob Hoffman does trade a more subjective version of this system that will yield better results. More on that next. Remember, the enemy of great is good. I have 7 ideas on how we can improve this system. One of the methods used by Rob Hoffman to maximize gains is using a trailing stop loss level. For example, if we exit the trade on the first touch of the green line, our risk to reward on this particular setup is almost double. Second, identifying the higher time frame trend can be key to the success of this system. Here we can see a 4-hour chart at the bottom and a 15-minute chart on top. On the 4-hour chart, we see a lower high, then a break of clear support, which is when we zoom on the top chart and take all of those juicy setups. Next, the indicator I used to confirm entries can be replaced. The traditional method is to use just a 20 EMA that is sloping down at a 45-degree angle. Another method is to combine EMAs from 2 different time frames on the same chart. Or you can even use a Williams alligator. The next thing to highlight is the high number of signals this system gives and how to participate in them. If you are in a strong trend, you can move your stop to break even before hitting the profit target, thereby mitigating your risk. I have some specific ideas on this concept that I can cover in our circle community. The next tip is another way to exit the trade. By using the divergence detector, you can see that exiting this short when bullish divergence is detected yields a huge trade. Of course, this method would need to be combined with others to be most effective. Additionally, Rob Hoffman designed the system based on the market actions of institutional traders. As such, the concept of an inventory retracement bar is better suited for the daily time frame. However, the test does indicate its utility on the smaller time frame charts. If you want some more information on this system, there are 2 YouTube videos you can watch. One from Trade Pro and the other from the Online Trading Signals channel. Both are worth a look. In addition to Rob Hoffman's own website, links to all are listed in the description. If you want to interact with our community and support the work I am doing here, head over to our Circle community where we are discussing all things trading related. And have a great day, because you deserve it.